Good morning, everyone, again. Good afternoon, depending on what part of Africa or the continent you are. It's another wonderful session that we're having this moment. The title of the session is actually Building Collaborations Between FinTech Organizations and Microfinance Companies, or between building collaboration between microfinance institutions and FinTech companies, rather. We have a lineup of professionals who are deeply involved in microfinance and fintech lineup for this session. And you get to meet them shortly after the introduction of the moderator for the day. The moderator for the day is Akanimo Ojo. She has over 15 years of experience covering marketing, sales, product development, payment, customer value creation, and management. Within this time, she has developed flagship products and value-added services for financial institutions in Nigeria, targeted at small banking, capacity building, business growth, and access to finance. This has aided our contribution to international research and reports by organizations such as the International Finance Corporation, SMEs Finance Forum, etc. Presently, she's the premier MD of Source Microfinance Bank, a new entrant into the market with the mission of reinventing banking using innovation and technology to provide high quality service mostly to underbanked and unbanked persons. She holds a Master of Business Administration from the University of South Wales amidst other qualifications. Mrs. Akani Mojo, the forum belongs to you. You're welcome. Good morning.
Thank you very much, Lou, for that warm introduction. I'm excited to be here. It was a wonderful time yesterday, and I hope we'll just continue having a wonderful time till the end of this conference. Welcome, everyone, where you're joining from. I'd say good morning, good afternoon, and good evening. The entrance of fintech presents an opportunity for scalability, improved efficiency, and customer service by microfinance institutions to target audience. By collaborating, MFIs and fintech companies can leverage each other's strength to overcome challenges and reach a wider audience. Now, this partnership can foster greater financial inclusion, improve operational efficiency, and create new opportunities for the underserved individuals and communities. On this panel today, we would want to explore various strategies for collaboration, such as piloting joint projects, leveraging technology, data sharing, capacity building, and co-creation of innovative products. We would also touch on the importance of regulatory compliance and the measurement of impact. Our very experienced panelists who represent both the MFIs and fintech companies would share their insights, experiences, and success stories in building such collaborations. Together, we will delve into practical aspects of these partnerships and identify the key factors that can contribute to their success. We hope that through this panel discussion, we can shed light on immense potential that lies in the collaboration between MFIs and fintech companies. And by working together, we can bridge the financial gap, empower individuals, and contribute to the overall economic growth and prosperity of our communities. But before we delve in, I'd like us to meet our panelists for today. One more thing, please feel free to drop your comments and your questions as we go through. The session would be for about an hour. We'll pause around 50 minutes to just take questions from the audience. First off, I'd like to introduce Jack Alexander Long. Is a managing partner, banker, microfinance expert, board member with over 25 years local and international experience in banking, microfinance, digital and corporate finance in many African countries in Central Africa, West Africa, and South Africa. Jack holds certificates from many prestigious institutions, including the Harvard Business School, Axion, African Board Fellowship in South Africa, Boulder Institute of Microfinance in Italy, and the School of African Microfinance, Kenya. He's currently the Associate Regional Director of Africa Microfinance, Hope International. You're welcome to the panel, Jack.
Thank you, Ake. Thank you for having me. Good morning to my fellow panelists, and thank you for all the viewers who have tuned in this morning.
Yes. Next up, we have Alexander Lenchenko. He's a banker with over 19 years of experience in various business areas, including SME, agricultural and microfinance business development, retail, IT, and operations optimization, risk management, digital finance, amongst others. Prior to becoming the CEO position of Fari Microfinance Company, which is Egypt based. He was part of the International Market Management Consultants Company, inspiring development in a Germany based company. He has a master's degree in economics from the Simon Connects Colvey, pardon my pronunciation, National University of Economics, as well as banking, economics, communication, and humanities certification from Pro Credit Academies in Germany and Macedonia. He's an experienced trainer in the areas of MSME lending, sales, credit risk assessment, and loan portfolio management. Is fluent in Russia, Ukraine, and English. Welcome, Alexander.
Thank you very much for introduction. Hello to everyone.
Okay. We also have Adelano Adeosi, who is the founder and CEO of LendGrade Axtrix Pay. He has 15 years of experience in financial services industry. His expertise spans across all areas of building a financial product and developing disruptive digital technologies to enable financial inclusion, automate banking, and facilitate payments in Africa. Lano currently serves as Bank One Chief Commercial Officer for Abzone Group, a leading provider of software solutions to other financial institutions in Nigeria. You're welcome, Adelano.
Thank you very much. But for clarity, it's recently served as Chief Commercial Officer.
Okay.
Thanks
Thank
for having
you.
me.
Thank you for the update. And finally, we have Oguntoyibo.
AK, I'm sure you got that.
Yes, I did.
I'm sure
Did
you
you
got that
hear me?
correction, AK.
Yes, I did. Can you hear me clearly?
Hello.
Yes, we can.
Yes, we can.
Next up, we have Oguntoyibo Abdulaziz. He has a business
I'm sure
administration.
I'm sure you got that correction. It was recently. Yeah. Thank you.
Yes, we did. Thank you for the update.
All right. Yeah.
I was introducing Oguntoyibo Abdulaziz, who has a Master Administration certificate from Yaba College of Technology, Lagos, Nigeria, a field experience of over 6 years in strategic business development operations, mobile money, agent banking, and digital financial services. Abdulaziz is a microfinance certificate banker and certificate from the Chartered Institute of Bankers of Nigeria. He's a fellow of the Institute of Islamic Finance Professionals of Nigeria, a member of the Association of Mobile Money and Bank Agents of Nigeria. He's a co-founder of Halavest, an Islamic fintech platform which democratizes access to non-interest financial products and services. Is also the co-founder of Inclusion ID, a digital platform to accelerate digital identification, communication, verification, and inclusion for a digital Nigeria. Please help me as we welcome Oguntoyibo Abdulaziz. I think I saw him probably dropped off. Okay, welcome Abdulaziz. We have you back on.
Yes, thank you very much. It's good to be here. And I can see beautiful faces.
Thank you for the compliment.
You're welcome.
So now that we have met,
You're welcome, Abdulaziz.
Now that we have met everyone, let's just delve into the discussions. And I'd like to start with Alex. I'd like to open the conversation with Alex. So if you follow through the conference, we have had a lot of talk on the opportunities of fintech and how it can help us really accelerate financial inclusion. But really, what we want to do during this session is to see the practical terms. So I would like to open by Alex sharing with us how that collaboration can come to be in terms of, so we know what both parties can do. And in some space, it's beginning to look competitive rather than collaborative. So just help us see how this can actually work. Over to you, Alex.
Okay, thank you for the question, and let's start our discussion. How it works. So I will start from our own experience because I am leading Favri Microfinance company, subsidiary of Favri Group, one of the biggest e-payment company in the Egyptian market, meaning that we are not typical microfinance, but we are tech-based microfinance company. That's why for me it's quite easy to answer this question, how we can elaborate cooperation and how we can increase financial inclusion, which is access to loans from the market. Like in normal classical way, how microfinance companies doing financial inclusion, just to increase the network of branches. It's first classical approach. Second approach, it's to make it network branchless, meaning that we can create remote solutions in which sales officers can go physically to our potential clients with handhelds, tablets, and whatever. The third approach, it's a digital application itself in which clients can apply for the loan. And at the same time, if we speak about fintech embedded products, we can say that fintech itself may have digital solutions or their own applications in which microfinance products can embedded can be as a cross-sell point to increase access for the finance from the client side. But if we speak about the real practical solution, which is really work, it's I would say it's cross-selling mechanisms through the partnership models. Because we have collaborated with more than 10 companies inside Egypt, in which we are receiving the leads. So our partners generating leads through their platforms, be it fintech, insurance, or be it food tech, or delivery tech, or agri tech, and so on. So we have a collaboration on marketplaces and so on, in which clients can apply for the loan through fintech companies, which is not belong to us, but we have a collaboration. That's why in this case, all fintech have much more access to the number of clients, and we can rely on this data, and we can rely on this network, and to increase the financial inclusion. Thank you.
Thank you very much. I like the example which you have given, which is the lead generation. So there is that collaboration with taking that from the fintech. But let me move over to Jack, because even in that, I think there's still a very gray line between what the microfinance institution can do and what the fintech is trying to do. In some markets, you see, and people have claimed that fintech companies are a step towards, probably because they could not get the certification yet for being a microfinance bank, but is a step towards that. And so the collaboration is really smooth because, again, you try to see that the fintech are trying to gain from the same market and do the same things that the microfinance doing. So let's hear from you, Jack. Has there been, in your environment, in your country, how do you work this out to say we can collaborate? We know that we probably have the same interest, but you can be happy and I can be happy, and we can both serve the underserved.
Well, thank you, AK. I think first of all, we need to go by the various definitions. If you may allow me, when we talk about fintech is actually a combination of finance and technology. So what that designates is just an innovative kind of way of use technology to rethink the financial and the banking services. Now, when you look specifically in the goals of fintech, so you can see that one, you have to make the finance easier, two, make it more accessible, three, offer better quality, and four, make it less expensive. Now, when you look into the microfinance itself, which is a set of financial services, which are also accessible, then there's already a collaborating aspect in here. And to the people which are generally excluded, either from the traditional or the formal financial system. And the goal of microfinance as well is to make the finance easier. So actually, there's already room for collaboration between microfinance and fintech companies. But like you have rightly mentioned, for us to be able to collaborate, there need to be challenges. There need to be something that actually ties us together. Now, when you look into that more specifically, you will see that, in fact, because microfinance is very almost well regulated, I can say now. So microfinance, we are having actually four main challenges that we are trying to address. The first challenge we are trying to address it is actually gaining access to new market segments. And this is where that's one of the area of collaborations. Now, you will notice that in some part of Africa or even some part of Asia, some of the microfinance have always taken to this one, because fintechs now, we all know that we are not going to be continuing to open brick and mortar branches. It's very expensive. We have clients we are in a remote area, so it's very expensive. Now we need to leverage on technology, having a partnership with fintech. And just to look into this one in particular, I have two very key example. I have the example, for example, of Diamond Trust Bank we had in Kenya and Uganda with Kopo Kopo, which is specifically given access to the SME segment, which is primarily some retail merchant that actually give access actually through Kopo Kopo to be able to have loans, which are actually originated by Diamond Trust Bank. But even more interesting, you have an example even with Microinsure, which is a specialist of microinsurance, who actually partnered back in 2014 with AXA, for example. Now, we know that AXA is an insurer, but AXA also have a particular focus in financial inclusion. And so when AXA realized there was actually a way of partnering and a way to be able to tap into the low-income clients, AXA took a 10% stake back in 2014 with Microinsure. And in less than 2 years, AK, they were able to actually extend a coverage to low income to 10 million low income customers across Africa. And that was so profitable that they were able to increase their stake from 10% just in 2 years to 46%. So we can see that there's actually definitely a room to partner, just gaining access to new market segment. But even if I go to the second challenge that we are trying to solve as microfinance, which is basically creating new offering for our existing customer. Now we're talking about retention. We know that we have challenges in our microfinance systems to be able to retain our clients. So we have to make sure that we have the ability to create profitable and useful services for existing customer. Now, this is where we also rely a lot on having partnerships with fintech, because in the other hand, we have the data, we know our client, but we just need to add up some new features that will enable us to be able to maintain our client to have a sustainable revenue income to flow. And there's another example I remember in Ghana where Stanbic actually partnered with Dream Oval. And basically what they did is that they created a mobile payment platform. Dream Oval did a mobile payment platform for the Stanbic clients to be enable them to actually being able to access the market platform. They can pay the bills, they can do everything right in there, but they still remain the client of the microfinance institutions. And at the same time, the retention rate is high and the commission are also being shared. So another challenge that partnership is also very important is the data collection. Like I say, we know our clients, we know who they are, we have the data, but the reality is that there's so many data out there now, and fintech, they have so many data out there. And so what we want to do is to make sure that we are able to have access to that data, access to many markets, access to clients. We're able actually to redesign our product to be able to tap into that. And this is very much common in most of the part of Africa, where you will see, for example, nowadays, many microfinance institutions are partnering with fintech to develop some in-house digital application, field application for the loan officers, or even to develop some cloud-based platform application. All of this is actually to be able to help these microfinance institutions and the fintech to be able to continue the collaboration. Last one, actually a challenge as well, which is microfinance, is actually to deepen the customer engagement. I know this is very dear to you, AK, but you see, simply providing products and services is often ineffective. And we all know that. We have all been practitioners, because people need to understand how these services actually work and the associated benefits and rates. Now, this is where we have problem. Microfinance will deal with people that most of them are illiterate, they're in remote areas. It makes it difficult. So, but when we are partnering, for example, with the fintech, that can actually help us to integrate what we used to call learning moments, into the products. That's very important. That actually helps these people to have a financial capacity to understand the potential of the financial product. Again, we have example of this one where we have, for example, some of the institutions, we are actually collaborating with some of the fintech to enable, by artificial intelligence, they can send some tailored text messages to customers, reminding them to save, or even before any active client service is being used. So we have many platforms like that. And so I in as much as I do understand that at times people may think that fintech are taking some of the market share of the microfinance institution. But again, like I said, looking into these 4 key areas, there's definitely a room for collaboration, and we have seen it happening, and there's no reason why it shouldn't continue to happen.
Wow, such a brilliant answer to that question. Thank you very much. That was so loaded. You talked about customer retention, customer service, data collection, and I think those are very valid points. And which would bring me, let's touch on data, because that is also very big. Now I know that I'm coming to you, Adelano. I know that one of the fears that microfinance banks have when it comes to collaborating with fintechs is the issue of data. The fact that we have on the other side the microfinance banks that are very regulated, we still haven't really landed, or I would say, be where we want to be when we look at regulation and fintechs. I feel, as a personal opinion, that there's still a lot of work that needs to be done with regulating fintechs. And this fear, I think, is what some microfinance banks are struggling with, as to our customers' data out there, and this fintech is probably just a year old or 2 years old. How can we collaborate? So, could you please share with us from your experience how microfinance institutions can overcome challenges like this to enable the collaboration process to be very smooth?
Okay, thanks, AK, and my fellow panelists on session.
You might want to mute or speak louder, one of them, because we can't hear you.
Okay,
Okay, great. Great.
is it
You're good
is
now.
it better now?
Yes.
Okay, all right. Thanks, AK, and every other person on the call. Yeah, I appreciate you guys all. Yes, going by the fears microfinance banks, microfinance institutions actually bring to the table whenever a fintech approaches them for collaboration. It depends from the angle of collaboration. From this part of Africa, Nigeria, with a very vast market and so much untapped, population in the bottom of pyramid, um, I think microfinance banks need to know their position and see that the fintechs need them, right? So it's a relationship that they both will have to leverage on to achieve a common goal of driving financial inclusion, right? From Nigeria, there are different kind of licenses a microfinance banks actually leverage on. There could be a small unit, tier one, a tier two, or a state or a national license microfinance bank. But trust me, technology makes the difference for a bank. A bank could just have a singular unit license in a corner, like, and with technology, which means fintech, right? It could be everywhere in everybody's mobile devices or in every nook and cranny of the country. So rather than the microfinance bank leaving its business of basic banking operations, right? Or rather leverage with a guy who has grown number or has the infrastructure for numbers to be ramped up in this like partnership with smart and of course strong fintech. It doesn't really smart and strong doesn't really mean it has to be around for a while, right? So if it needs to actually define products that will take the microfinance bank out there. So from my history of relationships with microfinance bank, in the last 12 years, I've been providing core banking application to these microfinance banks, telling the microfinance banks You do not have to keep your banks within the brick and mortar of the four walls of your banking premise, which limits you to just serve the people within your environment. So that's why we almost had over 1,000 microfinance banks in Nigeria, right? But if you look at it, there are just about less than 200 of them that have 80% of the market base, right? Because you find out in Nigeria, an individual has more than 3 bank accounts, right? And where am I going to keep my funds? Is the guy that gives me real-time access to my money. So the only way you can do that is technology, right? Now, when that comes to how and where I should partner with, leveraging, historically we tried leveraging on the commercial bank branches, since in the country here microfinance banks transactions do not go into clearinghouses, so you have to leverage with commercial, partner with commercial banks. So because the commercial banks already have physical presence across the country, so you begin to think, okay, let me partner with this commercial bank so my customers could walk into those branches of those micro commercial banks to access their funds. So we built a system to allow for a microfinance bank customer, without necessarily having an account with a commercial bank, walk into a commercial bank branch in the southern part of the country while he has just moved from the west, right? He moves in there and he goes over the counter to access his fund that is domiciled with a microfinance bank from where he's coming from, like, far, far away, right? So, but because banking really left even the commercial bank locations in Nigeria today, it has moved to pay point, like to agents. That's why you find the likes of MoneyPoint, OPay, who started by issuing out POS devices. So, and at a point in time, the brick and mortar branches, there was a restriction and movement. So, and people needed to still access funds to keep the body and soul and keep life running. So they need to move to the nearest guy on the street. Mobile money is not really mobile money. It's now a guy who has a POS given to him by a fintech, right? And with the mobile device, with the point of sales terminal, the guy can swipe his card and access funds. However, the card was issued by a bank, but the guy making money is the guy who has issued the point of sales terminal. So, what we have simply said today is that microfinance banks, financial institutions generally, need to actually collaborate with fintechs who have product offering. So one of our strengths with at Asterix Pay is to design products. We change the paradigm. We go over, like, I see myself seated as the MD of the microfinance bank, and who is desirous to have his products in every street of the federation. So I build a product to the guy and I tell him, oh, what is your niche in this industry? Why are you in this space? Oh, you are actually having partnerships. Okay, take this technology and I can tweak the solution with this particular product to you. So if you were just a microfinance bank, if you do not partner with a fintech, the fintech will still come into that space to meet your customers and you will miss out. So it shouldn't be fear from the angle of technology, from the angle of risk of data. These fintechs today have a simpler way to ensure that they have, in Nigeria today, we have what we call NDPR, for data protection as a regulatory body. So a fintech is meant to actually position himself by ensure that it complies or even enhances the microfinance bank to be in compliance to data protection, because he is responsible as the custodian of the data of the customers. So if he exposes that to a third party who has built technology, he must ensure the guy complies likewise. So he provides dashboard to ensure he sees the end-to-end transactions and what transaction charge is happening at every point in time. So with integrations, things are better. But if the fintech stand alone, then it becomes, you open up the system to likely challenges that may go overboard. But so the microfinance bank need to have a robust, simple technology that could expose APIs. I had Alex mention that. So we have application interfaces, program interfaces that can actually interface with these fintechs, so that whatever they are calling from their application is transparent and is seen in your books. So that's why today we have been able to build a terminal management system that layers on an automated credit scoring and loan management solution that we deploy to the microfinance banks. So we say, go to this platform, take these terminals we have given to you. You don't even need to incur the cost of acquiring the terminals. We give you the POS, right? So you pick it up, and from the dashboard, you link it to existing account that is already available in your banking host. So because of the integration, so that when these transactions happen on the POS device, you have point of sales terminals you have issued, the customer, which means you and your customer, has real-time notification of that value in your banking host. So, and you have a seamless relationship. So, and if the guy needs to move money from the interface, he has second factor authentication as compliance to ensure that funds are not just moving without the knowledge of the account holder. And of course, because transactions are drawn to the banks through this, the loan management system is in sync with those transactions. Thereby, it can appraise credit for the business, either a merchant or an agent who needs cash to do transactions. So by so doing, a guy could just be in a region of the country and he has transactions happening in different parts of the country without setting up brick and mortar or increasing his licenses. So no fears, no strings attached in this regard. Collaboration is actually the order of the day without anyone shooting his foot.
Thank you very much, Adelano, for that elaborate answer. If someone was still an unbeliever, I'm sure by your explanation and answer to that question, they would start being on the track of believing that this collaboration is essential.
It is.
Thank you. So I see Abdulaziz going in and out. Let's just be sure he's kind of stable before I pass the question to him. I'll come back to you. Alex. There's a question here where Adelana was talking, and I know that most of the time when we look at this collaboration, we look at it in terms of the liability aspect. Now, I want us to go into how this data sharing can contribute to a better risk management and customer segmentation. Because most of the time, even when you have this relationship in enhanced, we feel that much can be done with the data that's been gathered. So we have a lot of generic products. So you have one product that is serving everyone, the same type of loans, so many generic products in the market. And sometimes you have the fintechs build everything and then zoom, they're out of the picture once they hand it over. So how can this collaboration translate to better risk management and also customer segmentation, where everyone brings their best to the table and we don't just end the collaboration after delivering the project per se?
Thank you for the question. Yes, I agree with you that sometimes it's a theory, like it works, that if collaboration is successful, everything is good. And another point is a practice, how to do it. So in our case, again, if we speak about practical aspects, our company is based on the fintech, as I said in the beginning. So we collaborated with the payment company, and we know information about 20 millions of Egyptians who are doing transactions over the 300,000 post-terminal network in Egypt. So we can speak about consumer in this case, and we can speak about microfinance. Our topic is microfinance, of course. And we speak about 300,000 post-terminal machines in which we know all the data about the transaction turnover, average ticket, frequency, how many days even per month this particular merchant is active, and so on. So normally, how it's done, how is the decision making done in the microfinance industry? First point is potentially we can have official financial statements from the clients, but we all know, and we are all not naive, that we have less than 1% of clients who have potential bankable approach with meeting financial statements. So in 99% of we deal with self-declaration from the client. And what does mean self-declaration? Questions about the business and trying to cross-check these questions, this information that we receive, logical questions, in order to be able to answer the questions that if this data is reliable. And it takes a lot of time, this time-consuming process. And the third approach is data sharing, as you mentioned. And once we have a reliable data, we don't need to spend time for for processing. We don't need to ask extra questions. We don't need to complicate the process, and we don't need to increase the bureaucracy. We don't need to ask for a lot of documents to prove whatever data we receive. In this case, as a practical example, we created scoring models for clients, for our clients, in which we rely on it on 100%. And once we have pre-approved it for such clients, we decide on it within maximum 30 minutes. It's maximum. But normally, speak about the real fintech or about the future, such decisions need to be done in 30 seconds, not 30 minutes even. So once you apply, we have pre-approved limits. We just need to double check iScore, which is in Egypt credit bureau, and sometimes it takes time. And if there are some extra information, we need to consider this information. If not, then the decision is absolutely automatic, automated decision, and which can be done in minutes. Second point, for example, based on the practice, we can say that we increased our time for processing like 5 times if we speak about scoring models and our internal clients. At the same time, we speak for majority of microfinance companies. They don't have ability to build microfinance company on the fintech company base, and they need to collaborate with potential fintech companies in order to receive the data, in order to exchange the data. And then it's a question mark, how do you build the ecosystem itself? And as a practical solution, some finance companies, only minority of them, building digital lending platforms. How does it work? So currently we are in development of such digital lending platform in which we will have all our partners linked to this platform, and the exchange of the information is done in real time. So whenever potential clients, let's imagine, who are living in the rural area, apply for the loan through the mobile application, and then this application goes to the digital lending platform, in which we have a scoring mechanism or scoring engine, in which we agreed with our potential partners that if client will apply in such a way, it will go through scoring engine, and based on the parameters we have in scoring engine, it will be eligible or partially eligible or non-eligible for different financial institutions, which can be embedded in this platform. And once the decision is done, it's a matter of choice. Or we are going to finance this client from our side, or we can offer the service to other financial providers, be it microfinance companies or banks, who can send the application offer to this client. Client later will see that he is eligible for 3 or 4 or 5 companies at the same time, and client can choose with which company he can go and to apply and to receive the final loan. So client receives the best pricing in this case, because competition is done on this case. The competitors competing for the client. The process is fully optimized because it's data sharing, and alas, like everybody receive what they need to receive. That's why data sharing is an essential step in the future to increase the speed of processing, because whenever a client buys the product, what the clients think about price, about speed, and about quality. In this case, we can decrease the price because we don't have operational expenses in this case. We can increase quality, meaning that we don't need to increase the bureaucracy and we don't need to ask too many questions from the client. And third, we will increase the speed, because the speed will be kind of rapid. In this case, client will receive the full solution, and we don't receive the risk in this case. So this in short.
Okay. Thank you very much. That was quite detailed, and I like how you delved into the risk part of it. But I'd also like to touch on Jack for the segmentation part of it, because it's very important that we know who we're lending to and be able to build customer-centric products. So Jack, I would just like your contribution on that question, but now on the customer segmentation part. So how can this collaboration help us know our customers better? You did talk about customer retention, which I think also ties into this question. If you can also lend us practical examples of how you have leveraged any of these collaborations to ensure that you offer customer-centric products, or you modify the product based on the data that you have gathered from collaborating with fintechs.
Absolutely, okay. Like I said, one of the purpose of collaboration, like I did mention, is actually to be able to solve a challenge, to solve an issue. And as you have rightly mentioned, is that microfinance institutions would deal with people that are basically poor. Some of them, they are below the bottom of the pyramid. And definitely it's very costly to be able to serve some of this client. Number one. Number two as well is that one of the good thing in Africa now is the mobile penetration. And we are all quite sure that in most of our remote areas, in the rural areas, there's always somebody with a mobile phone somewhere, whether it's the agent network or whether it's some of the parents, because we all do send some remittances to our family from time to time. So the what we have done specifically, for example, in one of the countries in Malawi, is that we were able to have this relationship, this partnership with the MNOs, whereby for those specific region where we have our branches up north of in part of Malawi, we're able to have the data, the behavior of these particular clients in those particular region. We're able to know, for example, how much money they were using to recharge their mobile phone, for example, and based on that, we're able to tailor some product to be able to know that this is the level of the product that we are able to put in place in that particular region. And this is the likelihood how the repayment could be. Because depending also of the environment, the economical environment, which was mostly agriculture and dairy. So we knew exactly that this is the economic activity happening up there. And so if you want to tap into those communities, to tap into those segments, taking into account the behavior that we have seen using technology, this is the way we need to structure our product and to be able to actually structure the repayment process of that as well. And also to add onto that, like I also said, that one of the reason we are also collaborating was also to make sure that we are also more efficient. So also taking into account the fact that it was becoming more and more less costly for us to be able to service those clients. So now we're able to have this product in place.
Thank you very much for that answer. I think it was a very brilliant answer. Abdulaziz, can we catch you now? Because I see you zooming in and out of the room. So if we can get you for 1 minute, it would really be nice. Okay. Can you just confirm that you're very okay? We've lost him again. We owe that to technology, but let's move. So I'm coming to you now, Delano. So you did speak a lot about when you were talking about the collaboration between fintechs and microfinance institutions, trying to build our confidence and the fact that everything is safe. But we have occurrences where there has been need to fear. We have potential risks and ethical consideration. So yes, we have seen all the beautiful things that you have said, but could you help us also identify some of the potential risks and some of the ethical consideration, and also provide some solutions? Because I would like to think that the fear here is very valid, because there have been instances where we have seen things have happened, data had been compromised, and all sorts. And then you have fintechs here today and they're not around tomorrow. And the microfinance institution is stuck with the fact that they do not have support because the support is no longer available or no longer in existence. So please, could you share potential risks, ethical consideration, and how to mitigate that? Thank you.
Okay, thanks so much, Akanimo. When it comes to today, fintechs came from the need for fintech, right? The niche fintech has actually come to create is for the banks. So when a fintech comes to the market and see himself like a guy who is indebted to the microfinance banks, he will better align and work with the instance that is more comfortable for the banks. And So now these banks have, of course, legal personnel. It's just about looking at one, the persons behind this fintech. It goes a long way. Where are they coming from, right? Two, the microfinance bank. There's a challenge actually. The challenge is how informed are the microfinance banks about what the fintechs actually doing. So there's a gap of a product and a fintech consultant. Now, like I said, what I tried correcting when you were making an introduction. I work for a company like the company you mentioned, Hubzone, and my name was as good as I was as good as the personification of that particular product. Now, what happened? There were about 860 or 870 microfinance banks in the country as at then, right? Now, and my team was able to onboard over half of them onto a cloud SaaS infrastructure. Yes. So I left that organization in 2021 with about over 400 to 450 microfinance banks, aside from mortgage banks. Now, guess what happened? We actually built a core banking application. That itself was fintech. But we were not the B2C, we were not the customer facing organization. We provided infrastructure to these banks so these banks can actually act as fintechs. So my strength and background is give products to these banks so they can be the fintechs. So take a core banking application that will enable you to actually create products to take to market yourself. But over my 8 years of handling and sitting as a chief commercial officer and product persons for that organization, I discovered that the gap to the microfinance banks is the lack of expertise, the skill set, the resources to actually turn on a product and take it to market, right? So that is why the gaps we are actually are covering for the bank today is, see, I owe you. In the last 10 years, I have given you guys, a large number of you, a digital core banking application. On that platform, you can actually tweak and roll out. That's why today we were the one who made it possible for all this microfinance bank to receive direct transfer from a commercial bank. Yes. So today you could just go to a commercial bank, either in branch or a mobile application of a commercial bank in Nigeria, and you can transfer to the microfinance bank. Initially, these microfinance banks were marginalized. They don't even play in that space of digitization. Their Nuban account is just their account is just limited to that branch. So when you go to a microfinance bank to deal, you get your credit. They don't even mop up deposits. All people do is go there to actually get loans. But come on, that's why the credit, the interest rate of the loans are high. But we say take deposit. But why would a guy want to keep his deposit with a microfinance bank? And before he access that bank, he needs to visit the bank when there are digital channels around. So we decided to build electronic channels into that core banking. Like that's history of actually what brought us this far. So you can now issue debit cards. So microfinance bank customers now own debit cards. Like we open up that space for other fintechs to now come in to say, okay, fine, let's leverage on, because what matters was the education. I remember me taking Android devices and speaking to business owners, microfinance bank owners, and MDs that, see, you don't need to be scared of cloud, because we can't limit this business to this brick and mortar. There are a lot of people out there you are licensed to reach and they can't come in here, right? So if you as a person, as a banker in this microfinance bank, I am sure you have accounts with other commercial banks. And the reason why you have done that is simply because of the electronic access to that account. Now, come to think of it, you have an Android device in your hand. That may not be the first Android device you are using. You as soon as you pick up another Android device and you link your Google to it, you have your data back. So life itself has gone cloud. And I bring education into products, like communicating to them the best way they understand, then give them confidence that, see, you already have your core bank. I have not come to stop you from doing what you are doing, but rather to enhance you to do more. So what the human capacity has been doing, that it takes him or her 3 days for him to analyze a report or get things done, I'm not asking you to fire those guys, but give them different because your customer base will blow up. So pass that guy to other business operations and let technology do the work for you. So having delivered,
Thank you, Dan. Thank you. Let me pause you there for a bit because I think I want to catch Abdulaziz because I don't think we've heard his voice. Technology has not been very kind to him. I hope he hasn't offended technology. But let's get on here. So Abdulaziz, just say hi. Let me be sure you can hear me and you can actually contribute to this conversation.
Yeah, thank you very much. Can you hear me?
Okay, I think it's something we can manage. And I hope you have been following the conversation because I was reserving a question for you, seeing your background with really, and he's gone again. Okay, so we'll
Um,
continue.
I wanted to say
Yes,
some
we'll
few words here,
continue.
Ike.
Yes, I wanted to come to you. So we've
Uh,
had the fintech talk because I feel that this is really so he's mentioned quite a couple of things because I want to hear both your perspective, Alex and Jack. Now he's talked about doing the due diligence on the fintech. Do the microfinance have resources to be able to manage this? And both of you are in the right, positions to answer this question as to is this a real fear with what kind of fintech you're partnering with? So I don't know who wants to go first, but I'll let you do that, Jack.
well, I
Yeah, I'll
can
let
give
you
a
go
try.
first. Yes, please.
Well, thank you very much. Well, I think like I used to say, talking about my friends, the regulators, is that regulation cannot drive innovation. So meaning that you are better at what you know, and that is it. So well, what is very clear is that fintechs have opened new opportunities and promise new access to financial services. But fintech also need to understand that that potentially generates new form of discrimination. So there are actual questions that have been raised, and it is not like microfinance are reluctant. But the simplest question is: let me take a very simple example. For example, in Africa, women still have less access to mobile phone than men. So how do we ensure that they are not once again excluded from this innovation, for example, in the financial system? So how do we limit the abuse of a system that collects quantity of data, but which can mine digital personal data, for example? Now, I do understand that in the case of Nigeria, there's a regulation about data privacy. It's not the same case in some other countries. So it's normal that some of the financial institutions are a bit scary about that. And how also do we ensure that the banking information and the loan condition are understood by the clients who are illiterate, for example, or not used to text messaging, for example? So I just wanted to tell my colleague that, I mean, there's room to collaborate, like I did mention earlier, but definitely it's not reluctance from the microfinance institution, but simply is that we also need to be honest with the fact that some fintechs also are not also opening up for all the data. For example, we know that not the API are open today. Some MNOs are still not allowing some people to have access to the APIs, for example. So that need to increase. That we need to make sure that we have an open collaboration in that sector to be able to actually help us to achieve our goal. And I keep on saying we are not tech savvy people. We are some simple microfinance expert, but we don't understand the fact that innovation is very important. The world is going out there, and COVID has been there to remind us of the importance of being innovative in those ways. But we just want to make sure that we are doing it properly. And that's one of the issues we have with the regulator today, because one of the things that we also need to say is that we are talking fintech, but the reality is that when you look about fintech, I mean, it's expansive. It's actually engulfing a plethora of innovative applications and in various services. And there are so many applications coming every day, both in payment, in financing, in asset management, and insurance. So, and therefore there is a gap in the literature of all of this one. So we just need to have time. He has mentioned about literacy, financial literacy. Then the issue is between financial literacy and digital literacy. Those are two different things as well. So, but we just need to make sure that we keep on having the discussion that is flowing, so we're able actually to leverage on both sides. Thank you.
Thank you very much, Jack. Thank you for that contribution. So there is no doubt that there should be a collaboration, but I think identifying where the risk lies, because with every solution there is a risk. Identifying it is key to ensuring better collaboration. So let's move over to Alex on your contribution, especially given the fact that you have great examples of how you have partnered with different fintechs to be able to solve different problems as you have shared with us. But was there any time you had a fear, in partnering with some kind of fintechs, and what was it that you watched out for that enabled that your collaboration was actually successful?
Okay. So in order to understand that it's successful, you just need to assess the result of it, of course. And first of the result, it could be a different solution itself that may improve the client. Because when we speak about the traditional microfinance, what do we speak about? We speak about cash term loan, yes, in 99% of situation. When we speak about fintech collaboration, we can offer different solutions, which is first of all, it's cashless or digital loans that we may disburse on wallets, on cards, but it's not about the methods of disbursement. It's about the usage of this money. If fintech solution provide you with the options to use this money to purchase or to make bill payments or to purchase B2B products from marketplace platforms and so on. So again, if we speak about practical solutions, as of today, we're cooperating with two main fintech industries. First of them, it's payment industry with post-terminal network and so on. And second, it's marketplaces in which merchants can purchase goods that they are going to sell on their kiosks, on their shops, small retail places. And first cooperation, it's, as I said, payments. So for payments, we can disburse not only term loans, but we can disburse overdrafts or credit limits in which clients using it as a working capital for their daily bill payments operations. And if we speak about marketplaces, again, we speak about overdrafts or discounting financing, or sometimes even we speak about factoring or reverse factoring, in which clients have an opportunity to use different means of financial products and to have different use of these products. If we speak about marketplace, again, we have a client who purchasing goods for their business in marketplace. We have embedded solution which we will provide the limit for purchase, and once you purchase with credit card, with cash, or with overdraft solution. Once you have it, you may choose, and choosing financial services always benefits the client, because client can increase the working capital, can increase variety of products, and can increase sales, and as well can increase the revenues and profitability in the business. So this is the real cooperation with tech and different solutions that and offers that may be useful for potential merchants. In the end, we speak about the merchants and final clients in this formula.
Okay. Thank you very much, Alex. At least you have shown that the collaboration can happen with if we have the right kind of fintech, which is quite important. And I think that's where the fear here is identifying the right kind of fintech that can partner well with the right kind of microfinance institutions to be able to make all of this possible. Because if you look at it I don't think there's any aspect that technology cannot play, right? From identifying the customer, from onboarding the customer engagement, whether you want to give a loan to the customer, managing the risks, managing the loan portfolio. We have different use cases for that. Again, let's just see again, can we catch you now, Abdulaziz? It'll just be very sad if you can't hear anything from you, and the entire session will be over. Can you say hello or I, Abdulaziz? Can we catch you now? We've got like less than 1 minute to go. Okay, so while you're figuring that out, we have less than 1 minute to go, and I just want everyone to give their parting shots as to when it comes to, we've had a lot of discussions on how we can partner, what that can enable. We've talked about
Can you hear me?
regulators, we've talked about risk management. Great, I can hear you. I can hear you.
Okay.
Okay, great. So we're
Go
in
ahead. Go
pattern
ahead.
shots, and I do, yes, and I do hope you followed the conversation. So I would give you just a minute to just share how, because I see that you have done a lot in the financial inclusion space, and you have helped with in terms of when it comes to using technology for customer identification, which again in this part of the world in Nigeria is a very, very big issue. And you have worked with digital identification, communication verification. How has that helped with helping MFIs be efficient at operating? So operational efficiency.
There has been kind of challenges since inception. So I think what we do basically at the system, it's that we're digitizing the process of digital thrift, savings, collections, and microcredits for MFIs, for cooperative, and traditional thrift collectors. Today, you have over 38 million financially excluded people. Majority of them engage in across client segments. We have the independent thrift collectors, we have the cooperatives, we have the microfinance institutions. And it's inevitable for them to, they are well um, familiarized with that process. So most of these institutions run through different challenges across reconciliation issues, fraud, back office, automation, even trying to get the data of their customers to make informed decisions. So what we have done is we work with these institutions to help them transition to digital systems. With that, they are able to actually scale in terms of operational efficiency. I can give you a practical use case. We onboarded a client in Kaduna, actually a northern region in Nigeria, where they have over 2 billion in terms of portfolio, 2 billion naira in terms of portfolio of savings and loans across 15,000 customers, the staffs in 10 states. And I can tell you, when we were there for digital transformation and data migration, when they came on board on our platform, it was really central processing with over 20 apps, with laptops and Excel, trying to coordinate the activities of other branches in other states and also field officers. So what we did, learning from them is actually to infuse the digital transformation strategy, how they are able to digitize field operations, make informed decision. So they microcredit for like from above
Okay, so technology really hasn't been kind to Abdulaziz, but he had a perfect example, and I was looking forward to that response because I think it was a very practical example of how technology has really helped MFIs with operational efficiency. But our time is up, and we couldn't help that. I would just go round for everyone's parting shot as it concerns the topic. I'll first of all start with Adelano.
Okay, thank you so much. It's been quite an educative session, and I do hope that uh, anyone on this call or after this time out in the future will watch this cast. Will be very much convinced that the way to scale business, microfinance bank business, is to digitize operations, so you can actually move from beyond the brick and mortar and to go further. And most importantly, it's not just a traditional way of providing technology. It has to be product defined. So take a niche to the market, get product. So for a fintech could just bridge that gap to get the confidence of the microfinance bank by designing product so that the microfinance banks will be the one running after him to come integrate and take APIs so he could take them to market. Thanks.
Thank you very much for that. I'd move over now to Alex.
Yeah, just to final note, I would say that today we have heard like a lot of messages like we are living in the digitalized world, but when we speak about Africa, still it's not so digitalized as we would like it to be. But the clear point about it that we are going into the future, and future will not happen without digitalization. And those companies who will believe in such collaboration with fintech and who will create digital solutions for the clients, for the merchants in the future, will benefit from it, because classical microfinance will be vanished from the market sooner or later. And those who will be concentrated in digital and fintech will win this game. That's why it's very important, yes, and I ask everyone to think in this direction. Thank you.
Thank you very much, Alex. And finally, Jack.
Well, first of all, I want to say a few words for my friend, the regulators. I do believe that they were actually following us today. Again, like I said, the regulation cannot drive innovation, but they can encourage it depending on the regulatory approach towards innovation, because we have seen some of the challenges in regulation in some of the countries we are actually operating. And regarding regulation, really, I want to encourage my friend, the regulators, to there's a need to take every interdisciplinary field of fintech to develop a fair ecosystem in the finance industry to be able to excel, to perform well. And so lastly, I just want to say that you can never innovate faster than the market, but partnership with fintech on non-challenges of MFI and committing to champions to that, we can get more innovation into the hand of our customers. Thank you.
Thank you very much, everyone. We're so sad about Abdulaziz, but I think it was a good session. I would like to close to say that we should always put who we're designing our products in the forefront. What is the original intent and thought of microfinance? Collaboration should be built around that. Know the people that we want to serve, build products for them, use technology as an enabler to make it easier to offer the product and services. And I think when we do that, we will definitely find that collaboration is the only way. Thank you so much, Jack, Alex, and Adele, also Abdulaziz, for being on this panel today and having this awesome conversation. Thank you, Olu, for having us here, and I thoroughly did enjoy myself. Thank you, everyone, for listening.
Thank you.
Thank you, thank you, thank you. It's been such a wonderful time having you all here. Thank you, Mr. Adelan Adewusi, within a short notice for accepting to be on this platform and on this special topic. And thank you for sharing your thoughts and experience. I think it has really gone a long way in explaining why there's need for collaborations and what benefits therein for microfinance banks and microfinance institutions to collaborate with fintechs. Actually, you made a very, very solid point. You're actually making this microfinance institutions and microfinance bank a fintech company. So they're just piggybacking on you. Thank you so much. Very, very nice. And to my friend Alexander, thank you for sharing your thoughts too. You adequately appreciated. And to my friend Jacqueline, merci beaucoup. Thank you so much. You really appreciate it. You said something very, very important. Regulators cannot drive innovation. There's a very, very lovely way in which you put it. I can't really get it back, but thank you very much. Thank you. It's nice having you. And to Akanimo, thank you very much for being a wonderful moderator. You actually did the best you can on this job.
Yeah.
Thank you, everybody.
Absolutely.
It's nice having you. As we wait for the next panel, my distinguished panelists can now leave the studio.
Thank you.
Thank you
Thank
for
you very
having
much.
us. Bye.
Thank you.
Thank
Bye.
you. Bye-bye.
Bye.
The next session will come in shortly. Thank you all for staying tuned. As I bring in the next session, we're going to have a short interlude. Thank you.